Hey guys, Joe Franklin, market analyst for YouTrading, and in today's video, I'm going to be giving you a quick market update, talking about what's been going on this week, and we're going to be taking a look across the charts and talking about what could be coming up for the week ahead. So the first thing to say really is, before we go into the technicals, it's been a pretty risk-off week. Stocks, US 500 this is, or the S&P 500, well, a CFD that tracks the futures of the S&P 500, 1.5% lower on Monday, 1.5% lower on Tuesday, and still ebbing a little bit lower on Wednesday. So things are quite risk off in stocks. You've also had oil stabilizing today, but under big pressure in the last 2 days. And actually today and yesterday, new lows for the year, um, now trading back at December 2021 levels in the mid 75s. That is for WTI. But despite the fact that we've had these risk-off flows, which have also been weighing on things like cryptocurrencies, you've got the dollar failing to get back above its 200-day moving average for now. So what's been going on? I mean, let's talk about some of the main stories of the week. We've already had the stronger than expected ISM services PMI data, which comes on the heel of the stronger than expected US jobs data that we had last Friday. So the US economy is still doing pretty well, not in recession. But recession fears have been cited and seem to have been the main factor that have caused this pullback in equities. We've had a lot of very bearish commentary, for example, coming from key CEOs at a number of big banks like Goldman Sachs, Bank of America, I forget which else, JP Morgan as well, I think was the other one. The CEOs of all of those banks talking about how they're preparing for a recession next year, pretty much. So these recession concerns have been also been weighing on oil demand concerns, and that's meant that oil had been moving a little bit higher, had recovered back into the 80s on the China reopening story, because it does look like China's pivoting away from its zero COVID stance. They're now easing some of the rules on like isolation for people with mild symptoms and stuff like that. That had been supporting oil, but now we seem to have refocused on the global sort of economic picture. For now, we've got this European Union ban on Russian oil imports, which has just begun, and now we've got Russia potentially saying that they're going to not a European Union ban, sorry, European Union price cap on Russian oil imports. And now you got Russia talking about how they might actually ban exports to countries that are imposing these price caps. But for now, that story is kind of in the background. Oil still very much focused on the macro story. And I think that, if these recession calls for 2023 do come into fruition, as in we do see a recession in the US, we're already kind of seeing a recession in Europe and other parts of the world. If China still remains ropey, even though it's reopening, we could fall into the 60s and eventually hit this area of support down here. As for the S&P 500, let's return and look at the technicals. Well, earlier this week I had this trend channel drawn up, and it seems to still be in my trend channel, which means that there might be some people interested in buying the dip here, and potentially we do have later this week PPE data coming up, University of Michigan consumer sentiment data coming up. If that is market positive, i.e. Supportive of the idea of inflation rapidly moving lower, downside inflation surprises basically, then potentially we could get a bit of a bounce back towards the 200-day moving average. But the technicals, I've seen some other people talking about actually having this trend line here, which more accurately links up the recent lows here, here, and here. And we've had a breakout of that now, which means that technically speaking anyway, people might be targeting the 50-day moving average here, and then this low down here. And if you do get a hawkish Fed next week, and if recession concerns do continue to rise, if downside inflation surprises either don't materialize or start to wane in their power to lift markets, then it certainly seems like we could be moving lower. Because for now, we failed again to get above this downtrend that's been in play all year. which is another reason which might be encouraging some profit taking and selling. Had we been able to bust through that and the 200-day moving average, well, then we might actually already be on our way towards this next area. But yeah, if we want to get back to these August highs, we're going to need to get above this downtrend pretty much. But yeah, guys, that's pretty much everything that's been going on this week. I hope you all enjoyed the video. Hope you all found it informative, and I will see you all in the next one.